morning, everyone. Hope everyone's having a fantastic Wednesday, notwithstanding the little bit of a decrease in the crypto markets. The markets fell by about 3.5%, but that's following a little bit of a pump in the last few days. We'll be talking a little bit about why the crypto markets have decreased, why the price of Bitcoin has decreased, and then we're just going to look at some of the ratios relating to leverage and how we see it moving towards the new years. We're also going to speak about Bitcoin dominance and how it's fallen under 40% and what that actually means. A new ETF tracking Metaverse shares has been in the works by ProShares, which was the company that created the first Bitcoin futures ETF. Also, Tim Cook has said that Apple is looking at cryptocurrency. What are they going to do with crypto? Let's see. And finally, we're going to be speaking about Pakistan and how it owns more crypto than foreign reserves. Interesting things coming up, so stay tuned. So the crypto markets have fallen by 3.42% in the last 24 hours. It now stands at $2.24 trillion. A couple of days ago, it was standing at $2.4 trillion, and there was a correction, and now it's decreased by almost 10%. Bitcoin is down by 3.5%, Ethereum by 3.17%, Cardano by 4.24%. Almost the whole market is down, except for some random coins here and there. The main reason why Bitcoin is plunging today is because of leverage. A crypto futures sell-off and mass liquidation was noted today as the spot price of Bitcoin tumbled. If we look here, crypto futures see 300 million in losses after spot market drops. Nearly 80% of long positions were liquidated over 24 hours, with 90% losses on Bitcoin futures alone. Bitcoin prices rose above $52,000 on Monday, keep that in mind, and now it stands at $47,000, before tumbling by as much as $3,000 early Tuesday, causing over $94 million in liquidations. This was just on Tuesday. Nearly 80% of the 300 million in liquidations occurred in long positions. So we see a trend where the price goes down, people think that it's going to go up, and they hedge themselves. They buy long positions, they buy long futures and long options, and surely enough, the prices go up, 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 and people think, yes, I'm going to make a big profit. And then the bears come in, and then they slash everything by selling. The price goes down, and then when the price goes down, it hits the trader's initial margin. And once that happens, because it's leveraged, they become liquidated. If you invest $100 to buy $1,000 worth of Bitcoin, and your Bitcoin portfolio goes up to 1,100, you're making a $100 profit, which is 2x. But if your Bitcoin portfolio, let's say it goes down to 900, then your initial margin goes to zero because your loss is 100 and your position becomes zero. What happens then? Your position gets liquidated and you lose everything. This was what happened with nearly 80% of the $300 million in liquidation. Binance saw 119 million in liquidations. FTX saw 78 million in losses as well. On Ethereum, Ether saw a $57 million liquidation. Losses on altcoins futures were lower, with Solana and Terra traders taking slightly over $9 million in losses. The relatively smaller liquidation figures for altcoins compared to Bitcoin imply recent price surges for Solana and Luna were primarily driven by spot trading. What this basically means is that since not a lot of positions were liquidated in Solana and Luna, even though the prices decreased massively following this little bit of a correction, this means that there wasn't a lot of leverage in these two coins in the first place. So a lot of the trading that took place and a lot of the upward pressure in price was driven by spot trading, which is a good sign. It's organic. And this shows that the narrative is changing from Bitcoin being the dominant crypto in the market to more of the altcoins now. It's becoming more diversified now. It's not only crypto equals Bitcoin. It's now crypto equals Bitcoin, but we also have Ethereum, but we also have Solana, but we also have Luna, but we also have XRP. A lot of use cases. And this is why we're seeing Bitcoin dominance go down. I mean, we're going to speak about this a little bit later. There's another reason why Bitcoin prices have gone down and the crypto market followed. Investors appear to be less willing to add risk, choosing to pull money out of the crypto market at a time when crypto prices are near all-time highs. Whether this is profit-taking or good old-fashioned portfolio management is unclear. However, it appears this risk-off sentiment over the past 2 months is something investors will want to keep an eye on moving forward. When times are uncertain, when volatility is high, people tend to shy away from riskier assets, which cryptos fall under, and they move on to safer assets like stocks. But also the S&P 500 fell by 4% yesterday. So it's a thing where people are moving from crypto to stocks and from stocks to bonds and cash. And we have seen that when the S&P goes down, the crypto market goes down with it. And usually the effect on the crypto market is more amplified than on the stock market. There's also something else that we have to keep in mind going into this Friday. 129,800 options are going to be expiring on Friday. And these options are worth $6 billion. If these options are mostly long and they get liquidated, $6 billion is a lot of money, and it's a good part of the market cap. So we could see a decrease in the price of Bitcoin if this happens. At the same time, we could see an increase in the price of Bitcoin if the price shoots up from 48,000 back to 53, 54, 55. So going into Friday, we have to keep an eye on this. It's a matter of seeing how leveraged the market is and how sensitive the price of Bitcoin is to leverage, because the higher the leverage in the market, the higher the volatility, because not only do you have the spot trading affecting the price, but this is amplified by a magnitude of 10, 100, 500, depending on how leveraged positions are. The price of Bitcoin and its movements are amplified by this leverage that's taking place in the market. And we can see here that the leverage is now at all-time highs. It's crazy. It's going up and up and up and up. And we know that when leverage goes up, it tends to come down again. And I think this will happen on Friday. When $6 billion worth of options expire, we might see this blue line going down. And when this blue line goes down, the price of Bitcoin also tends to go down. Usually that's what happens, but we'll have to wait and see. But leverage remains very, very high, and the price of Bitcoin is now very sensitive to this leverage, which means that any sudden movements in this leverage ratio will mean amplified movements in the Bitcoin price. Bitcoin dominance falls under 40%, and now it stands at close to all-time lows of 36.7% in January 2018. A Bitcoin critic and Europac chairman Peter Schiff tweeted about the event on December 29th, which is today, saying that this is an indicative that Bitcoin is losing its first mover competitive advantage. We've spoken about this before. In the advent of a lot of altcoins coming to the market with massive market caps, a lot of use cases, and the narrative changing that Bitcoin is king of crypto is just proving to be true, because now the dominance of Bitcoin is going down. It used to be 70% at one point, now it's less than 40%. So Peter Schiff says that with over 16,000 altcoins to choose from, Bitcoin dominance market is now below 40% for the first time since June 2018. With an unlimited supply of easily created cryptos with virtual identical properties, Bitcoin is losing its first mover competitive advantage. And this is true. There are a lot more coins coming into the market that are becoming uncorrelated with Bitcoin. They're becoming uncorrelated with Ethereum, which are the two kings of cryptocurrency. Altcoins are having a bigger say in market movements than before. Also, research published by trading platforms 2 days ago stated that the data, which is dominance moving below 40%, may indicate that an altcoin season is incoming. I don't know if this is true, because Bitcoin dominance going down could just mean that people are scared that Bitcoin prices are going to go down due to the high volatility, the uncertain economic environment we live in. What this means is they might want to diversify their portfolio by moving from Bitcoin to altcoins such as Solana, such as Luna, which is seeing explosive growth, and other altcoins that are now available in the market with solid use cases. One thing that can save Bitcoin dominance is institutions, because institutions love Bitcoin. They adopted Bitcoin as a hedge in their balance sheets, and if they keep buying Bitcoin in large amounts, in the billions, which they have been done, it could put a floor to how much Bitcoin dominance could go, and it could see a jump back up above 40% if further purchases by people like Michael Saylor are made. And according to on-chain data from Glassnode, although Bitcoin's short-term supply has decreased by 32%, long-term holders added 16% to their treasuries during 2021. Even though the price of Bitcoin came to all-time highs, long-term Bitcoin holders, these veterans, have actually added Bitcoin to their portfolios. I mean, these guys bought Bitcoin when it was dirt cheap. They could have made easily 5 to 10x, but instead of doing that, they bought Bitcoin. They bought more. They added. They dollar costed average up, not down, which is counterintuitive, but this can be indicative that Bitcoin is facing upward pressures, and there might be something that these whales know that we don't. New ProShare Metaverse ETFs are to track Apple, Meta, and Nvidia. So ProShares, the first company in the US to launch Bitcoin exchange-traded fund, these are not spots but futures, exchange-traded funds, ETFs, is diving into Metaverse as it now plans to launch Metaverse-focused ETF. These companies that are included in this ETF include Apple and Nvidia, as well as social media like Meta. It's very interesting that they're including Apple. We'll speak about it later because Tim Cook has said that Apple might adopt crypto, and I'm sure they will because Tim Cook is a holder of Bitcoin himself. Also, on November 29th, two Canadian companies, Evolve Funds Group and Horizons ETFs Management, started trading their Metaverse ETFs on the Toronto Stock Exchange. Similar to this ProShares Metaverse theme ETF, they are tracking Summits have. So we're now seeing a trend where not only are we seeing ETFs focused on Bitcoin, but now we're seeing ETFs focused on the Metaverse. And not only is it giving exposure to the Metaverse, but it gives exposures to the ETF, which is essentially embedded in the Metaverse. This goes to show that there is demand for the Metaverse and there is demand for ETF just because the greater adoption is taking place and these ETFs are popping up. And according to a study by Reports and Data, the global metaverse market was worth 48 billion in 2020 and is expected to increase by 20-fold to 872 billion in 2028, which is 6 years from now. This is a 44% annual compound growth rate, which is absolutely insane. Tim Cook has said that Apple is looking at crypto, and here's what the company is likely to do. And also, Cook has said that he owns cryptocurrencies, specifically Bitcoin, stating that it's reasonable to own it as part of a diversified portfolio. Of course it is. It's essential for you to have some crypto in the portfolio. The world is changing. It's becoming more digital. It's becoming more computer focused. It's becoming more tech focused. So only owning cash and only owning stocks while inflation is so high doesn't really make sense when we're seeing explosive growth in crypto. There are three options that Apple might consider. Operate like an exchange, set up a software wallet with an iCloud backup of the seed phrase, and use the Bitcoin Lightning Network for Apple Pay Cash. If Apple operates as a Bitcoin exchange, they'll let you buy Bitcoin directly in the Apple Wallet app using whatever payments methods you have on file, including any of your debit cards and maybe even EFTs, electronic funds transfers from your bank account. They'll allow you to store your holdings in Apple Wallet while Apple itself will retain the key, so you're not. So remember, this is a wallet whereby you don't hold the keys. So essentially, you don't actually own the Bitcoins and they have all the power. And it's just like what Cash App, Coinbase, Binance does, where you can send, receive, and store Bitcoin without needing to store your seed phrase. There's the second option is if Apple sets up a software wallet directly on the iPhone, it will be like Blue Wallet where you have custody of your own Bitcoin and you have the seed phrase backup. And if you lose the seed phrase backup, then you lose your crypto forever. That's the downside to it, but on the upside to it, it gives you that extra security where the wallet is actually yours. The keys will be in your iCloud. It will be obviously encrypted, and there could be multi-factor authentication in order for you to access this seed phrase. And it's not really ideal, but it's better than Apple themselves holding your seed phrase, because then now you hold all the power. Another option would be to use a Lightning Network app such as Strike. In the Lightning Network, the Bitcoin transactions are collected in bulk, they're put in bulk, and then they're sent into the main network as one transaction. So in that way, in the Lightning Network, payments are done instantly, transfers are done instantly, and it's very, very cheap because they bundle it, it's in bulk, and then once everything is bundled, then it goes to the main network and they process it as one transaction. And it's a revolutionary idea, and I think this would work very, very well with Apple. Apple could use Apple Pay and partner with Strike. Strike does a couple of things that could be of interest to Apple. No fee options for buying Bitcoin and sending money to anyone in the world they operate in. Not only anywhere in the world that they operate in, but instantly, like you press the button and the Bitcoin is already transferred. And it accomplishes the global payment system using Bitcoin as a transaction medium. If you want to send someone in another country money, I input dollars, it converts to Bitcoin and converts it back to local currency when received. It sounds simple, but as I said before, it's a pretty revolutionary way to process payments globally for free. It cuts all these intermediaries like Western Union, which charge exorbitant fees, and it just makes transferring money cheaper, easier, quicker, and safer. Finally, Pakistan owns more cryptocurrency than foreign reserves. The Federation of Pakistan Chambers of Commerce and Industry reported. So there is absolutely no regulation for cryptocurrencies in Pakistan. The Pakistani public own $20 billion worth of cryptocurrency, and it's more than what their central bank has in reserves. The figure might actually in reality be higher because a lot of citizens purchase coins through peer-to-peer deals, which mostly remain unreported. There is no legislation for crypto and other digital assets in the country so far, so this $20 billion might be understated. And regulation is essential because it's a free-for-all in Pakistan now. It's just interesting to see how Pakistan is going to tackle this, just as India has tackled it by introducing legislation, speaking to major crypto exchanges or their CEOs. Pakistan could do something similar because it's currently insane. People are just buying left, right, and center, and there is nothing stopping them. And that's it for today's video. If you like the content, please leave a like, please hit the subscribe button, and I'll see you for the next one. Cheers.